Good morning, everyone. This is Daily Trading Analysis with a quick market update after yesterday's FOMC interest rate decision. We are going to provide a really detailed summary on the statement from the Feds and also the press conference. After another long month of speculation about its decision, the Feds finally delivered the expected 25 basis points hike and pause, quote-unquote pause language. And yet, stocks went down heavily. So let's analyze the Fed statement and also Powell press conference. There were a couple of key takeaways from this month's decision. The first of which is that the 25 basis point hike was unanimous. All the Feds, all the members of the committee agreed on this interest rate hike. So all the members are on the same boat. Fed governors love to talk and constantly say and confuse people on the media, but at the end of the day, they were all leaning towards at least one more 25 basis points hike. And that's what we got. So why, if we met those expectations, why the market did something like this rejection? Yesterday, during my live tradings, my live broadcast, I was providing this kind of setup that we are watching since 2 weeks ago. After this big breakout to the upside, we were consolidating with two big rejections on key levels on the daily. After that, we established some support, but we fell down on Tuesday, big time. We tested this previous resistance is now support, and we were expecting FOMC in this range, increasing volatility, and then it just came down heavily. During my live session yesterday, please check it out if you didn't do that, because it's really interesting, my real-time analysis, because I was watching exactly these points, this rejection, this pivot, and this resistance level to really see a consolidation up here for a long. If not, then I was watching for a short after this breakdown. I didn't trade that because this is super volatile, but I would like to provide you some analysis on how the markets react real time to what Jerome Powell says during the press conference. So at this point, it was like around 10 minutes into the press conference, Jerome Powell said the Fed is prepared to do more if warranted. So this is not a pause forever. They are still thinking about do further hikes if needed. And he added, a decision on a pause was not made today. So we've been discussing a lot in this channel regarding how the bonds market are pricing in a pause and aggressive interest rates cuts starting this summer. And I don't agree with that. And the Fed is also highlighting and pushing the other way. They will be stopping and pausing most probably. If they need to do more, they will do that. But there's no guarantee of a pause and even not cuts this year. So this was super interesting because as soon as he said that, we just started seeing a lot of weakness. We broke to the downside and we just rejected settlement that I was saying, be careful with settlement. Settlement price is really, really important. And we just broke down and we are sitting right now during overnight. Coming into London Open, we are at this support from the previous breakout on the 30-minute chart. So we are just hovering up here, but there's a clear rejection of higher pricing here. So before the press conference, the statement that they released softened the language in a way that suggested that a pause was ahead at the June meeting, at the next meeting. So they eliminate the phrase, the committee anticipates that some additional policy firming may be appropriate. They delete that and replace it by in determining the extent to which additional policy may be appropriate to return inflation to 2%, the committee will take into account. So they are analyzing real-time data and real-time events as the banking crisis. So the Fed has essentially closed the rate hiking door, but they left it unlocked. So it can be opened again if conditions deem necessary, if warranted. So then after the statement, he said these kind of things and we broke down. So in a classic fashion, Powell repeated during the press conference that the Fed would continue its data-dependent approach in determining next steps. However, stocks fell when he said this. And he noted that the change in the statement language was a hint and was meaningful for future policy firmings. So they are deciding word by word everything. So analyze in detail what they said and how the markets react to really see how is the sentiment, what is the sentiment. So for the banking crisis, the elephant in the room, Powell repeated that the banking system remains sound and resilient, same message as always, despite the recent banking failures, and PacWest is in a really tough spot. After market close yesterday, he sold off 50% and they are looking for a buyer. So no, this is not the end. Banking crisis is really, really real. And I personally really doubt that the banking system is sound and resilient. I don't know about you. So he noted that even with stress in the banking sector, the Fed is trying to avoid taking its eyes off the inflation ball by cutting rates too soon. That's the concern. They did that mistake in the past. Historically, they started cutting rates too soon. And that's exactly what the bonds market are trying to tell them. Start cutting rates. And I think that's not a good idea. So bonds market needs to really, really think about the history in the past before pricing in certain things. I don't think cutting interest rates, we are going to see in a few minutes the probabilities, but I don't think cutting rates too soon, it's good to support the economy. The economy has shown time after time with data that it's strong. So why start cutting rates and put in a dangerous spot the inflation battle? That's my opinion. So more on the banking. Overall, Powell noted that First Republic acquisition by JPMorgan was an exception. He went and said that I think it's probably good policy that we don't want the largest bank making big acquisitions. I agree with that. We don't want huge banks eating another regional banks to be even bigger, because that's a threat to the overall economy, sustainability, and also their own central bank. You cannot have huge banks bigger than your own central bank, because that's the statement that this bank is too big to fail is just BS. I don't like the sentence, this bank is too big to fail, so let's support it. That's a really, really bad approach. We don't need huge banks. We need more sizes, small, medium, and bigger banks. We don't want all banks just eating smaller banks like JPMorgan is doing with all these regional banks that are having troubles. So this is what Powell said. So the Fed confirmed that they doesn't have an agenda to continue consolidating banks. They don't like this consolidation, banks eating another smaller banks. He sees value in the banking system with different sizes, as I was saying, with different goals. So this agenda that the Fed is trying to help bigger banks that are too big to fail to really eat and acquire other banks to really support the economy, this is not their approach. They like having these different size institutions. So regarding rate cuts, Powell said, we on the committee have a view that inflation is going to come down not so quickly. Not so quickly. So that's where we need to start seeing the probabilities. He said that it will take some time to the forecast to show the economic data to all this pressure that is putting on the economy. It will take some time to really show signs of deflation, so inflation going down. So it would not be appropriate to cut rates until they see something meaningful. And he added, we will not cut rates. And even then, we have 96% of probabilities sorry for the update. We have 97% of probabilities for the 14th of June next FOMC meeting for a 0 basis points remaining flat. But take a look at this. Take a look at this. This is June, okay? This is 97 for a flat. But look at this. July, it's already pricing in 50% of probability for a 25 basis point interest rate cut. So as soon as July, analysts and also bonds market, we are going to take a look at that. Bonds market are pricing in interest rate cuts. Then either July or September, they think Fed are going to cut interest rates by 25 basis points. This is insane. Historically, they have remained at that high levels at the terminal rates, in this case 5.25, for at least 3 to 6 months. That's December. I think December is a very high probability of seeing interest rates cuts, but as soon as July, I don't think, unless the banking sector is just being demolished like in 2008 and big banks start falling down, I don't see this happening. This is a really aggressive interest rates cut because they think, analysts and bonds traders think that on December, we will be 75 basis points lower. I don't know about you guys, but I mean, this is unbelievable. I don't think we need this much support. And we are in a bad spot if we start cutting rates too soon. The Fed thinks that if they start cutting rates too soon without seeing actual and meaningful progress of inflation going down, they will do the same mistake over and over that they did in the past. So trust the Fed. Stop asking and pressuring peer-to-peer pressure these days for the Fed from the politics pressuring the Fed to just start cutting rates. I mean, this is not the proper way you beat inflation, because if you start cutting rates and we have this sticky inflation caused by corporate greed, if we start cutting rates as soon as in 2 months, 3 months, I think we are not going to see inflation going down, and we will not get rid of that inflation at least this year. I don't see this path, this progress being helpful for inflation. I just don't see it. So we will have to wait and see how the markets and the Fed expectations change as more data comes in. Employment data remains very volatile with ADP, private payrolls. We saw that economic data yesterday doubling the 150K expected, doubling to almost 300,000. So, I mean, that was, let me show you, that was really tough. This number was, whoa, big number. So today is Thursday. There's not a lot, at least in the US, but look at this. The European Central Bank is going to do a press conference and also decide on interest rates. They will do the same. They will hike 25 and announce a pause. We'll have to see. But all eyes will be on Friday's non-farm payrolls to see if it confirms these strengths or offers the Fed signs of hope in its war against inflation. So we will have to wait until non-farm payrolls and unemployment rate this Friday to really see if we have meaningful data that the Fed is really looking for before starting to cut rates. So let's go back to the charts and see real quick the bonds market. So CK interest rates futures for the 30-day federal funds, we have July. So this July, let me show you the pairs. So July. So they are basically at 5%. July in the bonds market are at 5%. Then we have September. September, we have 4.88. So if this continues going lower, this is more and more pricing in the first 25 basis points. That would be around this level, 75, the low of this candle. 475 would mean that in September, we might see the first interest rate cut. And then on December, look at this. This is just getting destroyed because they think on December we will be at 4.4%. So more than 50 basis points before December. And then analysts are even more aggressive in the path of cutting rates. I don't see this happening unless we start to see real crisis. Real crisis. I don't see this happening. Look at this. This was PacWest yesterday. After hours, after announcing that they were looking for buyers, 60%. 60%. Another regional bank and on the edge of falling. Another one. And these are all small banks. And if JPMorgan does, or another huge bank acquires all of these, this will just not be the same financial system, the same banking sector that we've seen in the past. We don't want huge, too big to fail banks. We want these banks to do well. Because every size, every bank has its own consumers and goals, and we need banks of every size, big, small, regionals with different goals. So unless these and more banks and maybe huge banks start falling down, start going bankrupt, I don't think this is going to happen. These super aggressive interest rates cuts. So we have to wait and see. Remember, this Friday, non-farm payrolls, unemployment rate. We see data. Fed is data-driven. Stop listening to media saying we need to support the economy. Stop seeing articles and taking into account that the politicians are pressuring the Fed because they have their own goals. But the real goal of the economy and for the markets, we need to soft land and to get rid of inflation. And those two are to be combined together in the same approach, in the same path. Cutting too soon rates will not get rid of inflation and will not support the economy, because the economy right now is strong enough to really have a soft landing and also beat inflation. Just take that into account. That's my understanding and that's my point of view. Let's take a look at the Nasdaq. So where are we right now? We are at this support at 13,100. I see this happening in the coming days, but I don't know, today, Thursday, it's a big day to really see continuation. Look at this. This is London Open. UK 100, the FTSE index is just skyrocketing. We'll have to see. Because usually when Fed start cutting rates, we see markets do this kind of thing. Let me get rid of the message. We see markets do this and then this. So watch out for traps. Watch out for liquidity traps with FOMO. And start thinking about why we should do things like this. If we are going to see a recession and we are start cutting rates, why are we going to see these kind of things? We need, markets are driven by value. Right now, Nvidia, it's more than 150 P ratio. Apple, Microsoft, Tesla, the big tech stocks are the only ones pushing this market up. Once Q1 earnings finished, I think we are going to see a big correction of the markets. A healthy correction. I don't want the markets to fall with nonsense. I just want a correction to find good values, to find good equity risk premium, because right now the value of these stocks, the value of all the market is just insanely high. So that's my final remark. So this is my summary and my detailed analysis of what happened yesterday and what are the consequences. So right now, anything has changed. Let me show you the 5 minute. We still see this weakness. We are trying to maybe put some support consolidate out here, but we really have to see settlement. We really have to see settlement. And even then, if markets do this, I will not go long. I'm just looking forward for that correction, and I don't want to get trapped at these levels. Because at these levels, there are more levels. There are inefficiencies on these markets still that can still be repaired, like these two and these levels. And we might see things like this. And if they do that, you don't want to buy up here. Just be patient. I will be patient. I'm bearish. I can scalp longs, but I want the big risk versus reward that this setup can provide to me. I don't want to get caught on this little value that we have on longs, because there's so much potential to the downside for a healthy pullback, and because the fundamentals are showing that we need a correction. So I will just wait for that. Thank you for your time as always. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time as always. Remember that yesterday we did a really nice real-time analysis live on the channel, so please take a look. And also, if you find these videos useful, this analysis, or if you want to really see other content on the channel, please say that down below on the comments, and I will try to provide you with this detailed analysis. So thank you for your time, and remember, more than ever until Friday, this week is super important: discipline and risk management. Discipline, risk management, and also a little bit of patience. So thank you, everyone. Stay safe, and see you later in the afternoon with the market update afternoon. So see you later.